Good day, money masters and treasure hunters. Welcome to the April 17th wonderful Wednesday edition of today's Closing Bell on the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom while he is away today. And for those of you not familiar with me, I kick things off for TFNN each morning, 9 a.m., go from 9 a.m. to 11. All those shows are archived on Tiger TV, Channel 9 for the 9 o'clock show, Channel 10 for the 10 o'clock show. I'm also author of Mastering Probability, a newsletter service for investing and trading, sent out by about 8 a.m. each day, covering the equity, the futures, the Forex, commodity, and all the worldwide markets. Enough about me, folks. This show is all about you, and I absolutely treasure your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life, because leading an inspired life, folks, that is what it's all about. So let's go look at one of our tools. This is the tool that I call a smile breeds a smile. You know, smile and the world smiles with you. Everyone, and I mean everyone, likes to be around somebody who smiles. Two strangers can pass in the street, and if one of them smiles, the other is likely to smile in return. Test it out for yourself. Try it tonight. I guarantee it works. Smiling is a gift that we can pass on to everyone that we meet, let alone the gift that we can give to ourselves. And the only cost of this gift is the little bit of effort. A smile, folks, it is contagious, and it starts with you. The Bears were smiling in the market today. Our call-in number is 877-927-6648. Would love to hear from you. Let's go take a look at these markets. We had the Dow Jones finish down 138 points out at 14,618, off almost a full percentage point. The S&P was down 1.5%. Trading out at $15.52, down $22.56. You had the NASDAQ Composite off 1 8/10%, nearly 2%. That was down almost 60 points, trading out at 32.04. Russell 2000 off 1 8/10% as well, losing $16.50, trading out at 9.06. NASDAQ Composite, we'll certainly talk about the NASDAQ with Apple being such a heavy weighting inside there. You had the NASDAQ off 56 points, 2 percentage points. The New York Stock Exchange off 1.5%, down 138. Gold trading out at 1372. That's on its way down to about the 1270-ish mark out there, maybe 1190, maybe even lower. You got silver trading at 23.23. Light sweet crude off $2, trading at 86.74. Light sweet crude could be heading down into the 70s. We'll take a look at all those charts. Anything else that you'd like as far as volume today? Volume on the New York Stock Exchange down with 866. Of course, that's the volume posted right now, 866 million. That was after bouncing up yesterday with 743 million and down with 975 million on Monday. So we've got everything. You had the, let's see here, you had the volatility index finish up 2.5 points out at 1651, an 18% bump today. Of course, 2 days ago, we had a 34% bump, or 43% bump. We'll take a look at that. Let's start off by looking at our S&P 500. What did it do today? Well, first, let's go back and let's start off with what really took place on Monday. And what really took place on Monday here was a very bearish reversal candle pattern. This is a 4-day, 4-candlestick pattern out here. You know, we had the S&P 500 break through that 1576.09 barrier. That was getting up over the support level or the resistance level of that October 11, 2007 price point. Thought that might have been a true breakout. We had it wasn't a breakout on volume, but still was a breakout. Looked like because we had the Russell 2000 that had broke out over 2007, the NASDAQ over 2007, the Dow over 2007. Looked like the S&P was just simply going to tag along, but no, it didn't. You see these two little candles up here on the following trading sessions, April 11th and April the 12th out there. It's not that those two candlesticks were the problem, because they most certainly were not. You would expect after a move up, and you take a look at that, it was like a wide-ranging bar, especially when you consider that the S&P 500 had pretty much traveled sideways after breaking into that October 11th swing point from March 8th all the way until that April 10th time frame. So they have two small-bodied candles up there. That was not the problem. The problem came in right here, April 15th, Monday. We came back into trading. You got a wide-ranging bar to the downside. That, folks, alone is saying, that, in fact, if you take a look at power of candlesticks out here, on a scale of 1 to 10, that would be, we'll call that a 10, as powerful as you can get from a strength standpoint. Then, what it also represented was volume off of the highs, volume off of the top. That is another signal to beware out here. Now, if you're watching us on Tiger TV, you're seeing a couple of channel lines and trend lines, the blue lines out here. That is the rising price channel, the red line being the trend line coming off of November 16th. Well, this 4 candlestick pattern out here, that is the same as the candlestick pattern that you see this 4 days, really referred to as a 3-river morning star at the bottom, evening star up at the top, but they can form in 4 candles, 5 candles. But if you go back and you take a look at significant lows in the marketplace, like June 4th, how about March of 09? You'll see the same candlestick pattern out there. So, and it works at the highs just as it does at the lows. We have rejected, or the S&P has rejected 1576.09. It's done it with conviction. It's done it 2 days in a row. Now what it's trying to do is trying to break out of that actual candlestick. It didn't do it today. It had every opportunity. It got down below that 1546.72. In fact, the low of the session here was 1543.69. Closed at 1552.01. We had a volatility index percentage increase of about 18% today. Usually, and I'll show you as we take a look at charts here, what I have on my S&P chart is every volatility day that was above 20%. So pretty close, but when you get above 10%, quite frankly, sometimes it's an initiation. Oftentimes you see a little bit of a reversal, and I suspect that what we'll see in tomorrow, we're going to see, a reversal, small reversal. It'll at least happen during the overnight session here, but what the S&P did do, it rejected that October 11th swing point low, but it's doing it. You've got volume pushing in, and what you really have in place here, the last bastion of hope here on the S&P 500, where the bulls would be hanging out, is that April 5th candle. On the S&P, that is a hammer candle, and the low of that is 1539.50. You crack below 1539.50. I don't mean crack. I mean close below 1539.50, and that will send price. The next place on the elevator on the way down is going to be the February 26th level. That's at 1485 before it goes down and it visits the December 31st level right around 1426. If we go over and we take a look at the SPYs themselves, we'll take a look at the SPY. We'll see that we've got really the same thing taking place on the SPY, the October 11, 2000 swing point low, 154.54. Now, there's 233 million shares on that swing point. Today's test was with 216 million shares. Monday's test on the way down, 216 million shares. How about yesterday's bounce? 147 million shares. Follow the yellow brick road, or maybe just simply follow the volume here. Volume is telling us that the S&P, that the SPY is getting ready to crack here. Let's go, as long as we're here inside the ETFs, let's go take a look at the Dow Diamonds. You know, the Dow has been the strength in the marketplace. The Dow Diamonds, we're taking a look at that rising price channel here. Again, on a price channel, what I'm using is co-located opens and closes. You're trying to identify the largest number of opens and or closes. That gives you good channel lines. You can see what the Diamonds did was came down today right to the bottom of that channel line, came down with 10.7 million shares. So today we'll call it down with 11 million shares. Yesterday up with 7 million shares. On Monday down with 14 million shares. The Diamonds, the Dow is pushing with volume. The Dow itself also has that pattern. I call that the hurricane pattern out here as well. And that hurricane pattern, that is that 4-day candlestick pattern. You can see that here. If you're looking at Tiger TV and you're watching, you can see that right here at the bottom of November 16th. I understand, we've got earnings after the bell here. So let me switch over on one of my charts. After the bell, we've got American Express, eBay, Select Comfort, and SanDisk, amongst others. Let's go take a look at eBay. eBay here closed at $56.10. They are out with numbers here. It says strong first quarter 2000 results, double-digit growth in revenue and net income. That's what it says. It's trading at $56, or at 55.62. So we'll watch that. When we come back from break, we'll go see where eBay is trading into, but it's a little bit all over the board, but not that much. Let me see here. Oh, when we come back, 55-60 or so. 877-927-6648. We'll be right back, folks.